Yeah, hopefully you're feeling refreshed and we can begin this session in which we have two very stimulating talks by Professor Tony Allan and David Norman. I'll briefly introduce each speaker just before they begin, and then we'll move to a discussion from our three panellists, who I will also introduce, and that'll be the opportunity, hopefully, for you all to ask some questions, and we'll have the online questions, all being well, coming in via this iPad here. So, to kick off, Tony Allan, I'm sure, is a face and a name that all of you recognise. He heads the London Water Research Group at King's College and SOAS, is a professor of both institutions, pioneered the concept of virtual water, and for that work and a lot of other work was awarded the Stockholm International Water Prize in 2008, has worked extensively also on Middle East water issues, and is currently focusing on why the accounting systems in our food supply chains generally completely miss the costs of water and of water misallocation. So Tony's going to give us the first of our two talks for this session at the business end. How can the private sector bring its strengths to bear in helping achieve equitable water resources management that benefit poorer people and contributes towards equitable and sustainable growth? So welcome, Tony, and if you'd like to challenge us with your talk.
Is this working, or can you hear me? Okay. Privileged to be here, such mature and wonderful senior people, as well as lots of others. Well, it isn't always the case. I was at a meeting the other night where it was generally all elderly men. I want to talk today from the point of view of water science, because that's what I am, but I have been trying very much to pull the water science community away from focusing on stuff down the hole by first the idea of virtual water, but also now by the idea of food supply chains and food water. So I'm, although a water scientist, I am a very deep disciple of good political economy, because most of the explanation you get is from really understanding the politics in economies. I'm going to be talking, as I said, about a number of things which aren't usual when you talk just about water. Food prices, we're going to be talking about food and beer supply chains, and about the private sector. We were asked to try to see how to align the incentives. I hope by the end you'll see that I've done a little bit of that. So first two, I was also asked by Roger to give a bit of background. Who is involved, public, private, civil society, and in what political economy context and previous and new development eras. So I'm going to be a little bit of history as well as a bit of identifying who's who. So this is a diagram, a famous diagram by Mary Douglas, which looks at the state, the markets and civil movements, which we've listed in our title. They work together or not, or ideally they work wonderfully together and should all be represented. I congratulate Roger on having a panel which has all of them properly represented here. The trouble with the market is that it often does the wrong thing extremely well. It can take us deep into oblivion by, think of big oil and big auto, how they took us in the wrong direction. Big ag also can take us in the wrong direction. So we need, obviously, to have the messages from the moral compass of society and civil movements to make sure that we get pointed in the right direction. Massive power in the market, massive power in the state, not much in civil movements, but thank goodness they point us in the right direction. I wish I had time to give anecdotes, but I haven't. If you just think of the way, however, that they look at things differently, this is a bit of a crude way of looking at it, but governments, you see, .gov.org.com has been there recently, but this framework has been there forever. Risk managing in government, risk avoiding in precautionary in the civil movements, and risk taking, but also deeply risk managing, of course, in the private sector. So this is who's involved. What I'm going to show is that on the left-hand side of that diagram, civil society and the market, that is where food is grown and raised with 90% of the water that society needs. 90% is on that side of the diagram. This is just to give this historical framework from 1850 through to now, the last three Vertical columns are the 80s, the 90s, and the present era. And during that time, because population has been rising, we've been using more and more water. 1980, however, was something of a pivotal point. If you're a social theorist, you say it's the end of modernity and the beginning of late modernity, or post-modernity, but late modernity. So it's well theorized, and as a consequence, the economies that could began to think about using less water, both from the 1980 to 90 because of environmental ideas, and then in the 90s, remember Dublin and the economics coming in, we then decided to think that water is an economic good. Now, in the space we're in now, we are in a place where we have participation and governance being the ideas that will get us to do the right thing. Meanwhile, the line going straight upwards, or diagonally upwards, is where many countries still are, thinking that the only way to get more done is to mobilize more water. I've just used that diagram to put this one on. During the history of water science and thinking about water and water engineering is being about blue, that's fresh surface and groundwater, until about 1990, and then we started to introduce the ideas of there being blue, green, and embedded water. And now, if we put on another box beyond that, I would argue that we need to think about food water. So I've been deeply involved in getting the idea that green water is extremely important into the agenda, and I would like to think that the next thing we've really got to be thinking about, and get everyone in the room to be aware of, that farmers will save the world with the help of accountants. This is also a little bit of history going back to about 1961. We've got investment in irrigation. The World Bank, as a consequence, we've used more and more water. But this line that's going up now is the important one. Food prices have been falling for at least 60 years, almost certainly for 200 and perhaps for 1,000. Food prices have been going down, and that's partly because we haven't included in that calculus the value of water. It comes free. There are lots of other things, of course, that have to come down, technologies and so on, pesticides and 1,000 different things. But you can see now that somehow when the economists put up diagrams, bless them, they start in 2000, and you can see where 2000 is, and if you get into a real fuss if you think that, what a tragedy. We've been there before. I remember coming down the right-hand side of the price spike, and I thought it was going to do that. It's hard to do that, but no, it came down again. So I'd like to get everyone in the room to write on a piece of paper, our price is going to go down to 2008 levels. And it's a very, very, very important issue. More important than water. And you don't know, do you? And it's the most important thing. So we are now in a position where we are in fact experiencing the other side, and I think that prices may not go down to 2008 levels, but they'll certainly go down to close to 2008 levels. Controversial. Let's see what happens in 3 years' time. As a consequence of that, we've got an adverse environmental indicator being put in place, and we find that Africa is still not doing very well. It's just showing how the improvements in water productivity have gone on. Again, since 1961, the world's doing all right. Asia's doing rather extremely well, but Africa isn't at the bottom. Will there be enough water? Yeah, there'll be enough water, certainly for what we've talked about mainly so far, that is the wash-type activities. All you need are some engineers, some money, some equipment, and some good governance. It's the good governance, it's the trick that has to be. So I'm with you all on that. So pessimists are wrong, but useful. Optimists are right, but dangerous. The growth in yields, are you aware of? It's amazing. You see, farmers have been doing wonderful things with the help of other science. The United States, South America, and Asia, but Africa is still doing badly. So people are worried about leveling off and going down, but Africa and South America have a lot of space to operate in. So these trends are not understood in my view, and they're very important. So who will deliver water security? Farmers will save the world, accountants will save the world, optimists will save the world. Because if you go to work as a private sector person in the morning, you go to work as an optimist, because there are problems to be solved. You wouldn't even start if you weren't an optimist. So water demand is determined by us consumers, and the consumption is mainly determined by water consumption is mainly determined by the farmers who are trying to meet the food demands of us. So this is where the spare water is. I just wanted, right at the end, show you how, and these are new and different things that you haven't seen before. What types of, I'm wanting to link now climate change with the food supply chain, with climate change and energy. And what I'm trying to show is that water supply chains and the energy supply chains are very interesting. In the water supply chain, the non-renewable water is, fossil water in the middle of the Sahara Desert in Saudi Arabia and other places. There's some water there. But on the energy supply chains, there are 6 types of non-renewable energy. And on the renewable side, you've got 2 types of renewable water. You've got green and blue. You've got a little bit of recycled and a little bit of desalinated, but they're so tiny they're not even, can't even see them. So there are basically 2, but you can see when we're talking about trying to put these 2 things together in a grand nexus, so we've got the sub-nexus of water and the sub-nexus of energy and climate change. You can see how different they are. They're very limited substitution in one case and lots of substitution and competition in the other. So we need to also, right, I'm there, just about. This is, you haven't seen this before, and it's fun, I think. On the water side, we've got 90% of the water is in the food and fiber and supply chains. Only 10% is in the wash and the industry. And you can get 70% of that back if you've got a bit of investment. So there are 500 million farmers managing that lot. They're the people that will give us water security. On the energy side, you've got the 20% energy used in the food supply chain, 80% in the rest. So it's a completely different thing. So what I'm saying is that we've got 2 huge supply chains. Private sector supply chain. This is a public sector supply chain, often as it happens. But the private sector supply chain, but we've got, of course, an awful lot of energy companies, private energy companies as well. So if we're wanting to do anything about the nexus, we've got to look at the private sector. So I think I've just about done it in 11 minutes, perhaps. Thank you very much. Thank you.
Thank you very much indeed. An amazing example of a presentation that was like a pyramid, packing an incredible amount of information in and leading to a very clear point and message at the end. So thank you for stimulating us with that, Tony. So I turn now to David Norman, who is Senior Manager for Sustainable Development at Sabmiller, a brewing company with more than 200 beer brands, 70,000 employees, over 75 countries or so, I believe. David is responsible for the company's engagement in policy processes across sustainable development issues, and as their name has already cropped up several times in discussions and talks so far, you know that Sabmiller are heavily involved in water management, water stewardship, and how that intersects with other resource issues. So if I can hand over now to David, welcome, and let us know.
Thank you very much, Nat. So you've given us a sense of the scale of the company. For those of you who don't know us, yes, it's a large international brewing company. We also do a lot of soft drinks bottling. And it's a company that, although now on 6 continents, came out of Africa. It started in South Africa, and some of the earliest investments were in Africa, Eastern Europe, Latin America. And that's very much still our profile of our markets. We're in 75 or so countries, hugely skewed towards developing and emerging markets. And one of the, put very crudely, one of the key things there in terms of being a brewing company there is we're brewing beer in a lot of hot and dry places, very simplistically, but that's a good thing if you're trying to sell beer, clearly. But it's a significant issue for us in thinking about the risk that we share in terms of water scarcity. We share with other businesses, we share with communities, we share that risk with farmers. And that's the heart of this issue for us, is how do we manage that shared risk. The other thing about SAB Miller is we have enormous numbers of smallholder farmers, tens of thousands of smallholder farmers in our value chain, tens of thousands of very small micro enterprise retailers in our value chain. So we are very strongly plugged into the small scale and sometimes even informal economy in terms of our value chain. So the issue about jobs and security of water, we are very locally rooted in a sense. Beer is a very local product. It's quite heavy relative to its value. So it tends to be produced and consumed in quite small areas. So in other words, the consumers, the people that work for us, the people that supply us, the people that buy from us, they are all very much within a single society. And that local rootedness is quite critical in thinking about how to manage this risk. And hence the reputation dimension of this. I wanted to talk about motivation. Why are we doing this? The reputation dimension of this is important. It's very much about local reputation, fundamentally. But I think it's important not to get stuck there. I think it's important thinking about the basis for collaboration, to understand that the motivation for companies, particularly food and beverage companies, in being involved in this agenda goes far beyond simply reputational concerns, important as those are. Because what we've done is we've looked at quantifying the risk to our business of water scarcity. We are mapping that systematically, market by market, going from country to country, trying to quantify and work with local stakeholders to ask the question, what kind of value of our business is potentially at risk because of water scarcity, and how should we therefore respond? Again, informed by those stakeholders' perspective, how should we respond to that? And that leads to a fundamentally a more powerful business case, I think, than simply worrying about reputation, which is the sense in which this is an existential issue. There are places for us where we've sunk capital costs into building breweries, perhaps hundreds of millions of dollars, that could be completely at risk. You might have to mothball, close down some of those breweries if you look at the projections of the water availability in those areas. And yet also the risk analysis ends up with great clarity that this is a shared risk. In other words, for a company like SAB Miller, there is no solution to securing our own water supplies that depends on doing that at the expense of others. And I think this is an important insight. It's in part because we're an alcohol company. We're at the extreme end there in terms of being very open to government pressure. I think some people presume that large multinational companies kind of run the world. In practice, we are very easy to target. If you're a finance ministry, where's the first place you look when you want to push up taxes a little bit? A large multinational private company is a populist target to hit, frankly. So if we get stuff wrong locally, that will land back on us very quickly in terms of impacts that affect our profit. So there is a genuine profit-motivated imperative for dealing with this shared risk. And the other side of that is most of the water that's used in an area is used clearly not by us. So we have large, highly visible facilities which are easy to presume are a major water user. In practice, every one of you that is familiar with footprint analysis will be clear, yes, we do use significant water in our brewing operations, but the vast majority is beyond that in the farming, some of which supplies us and some of which we have virtually no connection with. But that's where the water scarcity fundamentally arises. So if you're going to deal with that, obviously our first stop is enabling our engineers, our technical specialists, to tackle that on the efficiency agenda. Thank you. And they are really good at that. As you set them a clear target, they will drive up the water efficiency within our own operations. That's frankly the easier bit. You set engineers a target, they will deliver that. So we're well on track to be delivering a 25% water efficiency improvement globally across all of our different operations, from South Sudan right the way through to Australia and North America, 25% over about 5 years. But as I say, that is essential in terms of demonstrating we are doing everything we can that's immediately within our own power. But the fundamental point about this agenda is it's beyond our fence line, because we are dependent on the actions of others in securing the water on which we depend and on which others depend. And that gets you into some quite different kind of governance questions. We've talked a bit this morning about the governance in relation to allocation questions, which is absolutely fundamental, and no one should duck that, but there are trade-offs within that. But the governance in thinking about how do we all work together in dealing with the total availability of water and securing that over a 20, 30, 50-year time frame are quite different kinds of questions. I think we need to talk about more of that as well as the allocation questions. What does that look like in practice? Let me give just 2 examples. The first is the Water Futures Partnership that we launched with GIZ, with WWF on my left here, the partners all lined up, which is a practical collaboration program. So looking at lots of different responsive local responses, working with local partners, whether business, farmers, other NGOs, to think about local responses to water scarcity, securing water supplies for communities, for farmers, for the private sector, for everyone over the long term. That's expanding, so the Nature Conservancy is coming on that. And let me give just one example of what sorts of things that looks like, which is Nature Conservancy's aqua funds examples that we've got very tied up with. So take the example of Colombia, where we have a brewery in Bogota. That brewery was coming under massive pressure on the profit side through rapidly rising water prices. When we investigated that, those prices are imposed on us by the local water utility. We found those were absolutely justified in the sense that they were being driven by the extremely rapidly rising water costs faced by that utility, caused by silting up of the river. And when you look further upstream, that arises because of cattle ranching further upstream. So again, with the Nature Conservancy, with a relatively limited pot of capital investment from our side and from other actors locally, we work with those local farmers to change their farming, work with them, to, again, driven by their own insights, changing the farming practices, investing in better cattle, investing in better management practices, reducing the need for cutting down foliage for deforestation further upstream, reduce the silting up in the river as well as improving their own livelihoods, and dramatically reducing the costs faced by Bogota Water Utility, some of the savings, 4 million a year, being passed on to us as a business. So that's a classic example of a genuine real win-win here in terms of livelihoods, in terms of local ecosystems, in terms of government costs, and in terms of savings for the private sector. But frankly, we would be doing that anyway, even if there wasn't that immediate win-win, because it's about the viability of the brewery there. The brewery would have to go out of business if you didn't do that kind of thing. Just briefly an example, the second example, working in India, Nimrana in Rajasthan, where we're working with farmers, again responding to Tony's challenge. They're absolutely essential to be involving farmers in that process. So it's an area where there has been very few incentives on farmers to conserve water supplies. It's very groundwater intensive, and the kind of recharge opportunities that we have invested in working with farmers, as well as moving on now to local efficient irrigation techniques, have been absolutely critical in terms of increasing the water level. Farmers have reported up to 5 meters increase in the water level on the plains in a normal year, 3 times that in wet years, and the ability to have a new winter crop based entirely on soil moisture. So these are the kind of examples of real practical collaboration where there is a reason why the company is putting investment there. This does matter for our profits, and we're not ashamed of that. In a sense, that's what makes it scalable and sustainable. But there are classic win-wins there in terms of local livelihoods and government resources. So just to finish, I think this is an agenda that's about our own efficiency, of course. We have total control over that. It's about these practical collaborations, but it's also about the kind of policy engagements that we've done with these guys on my left as well, through the Water Resources Group or a Nexus report that we published jointly with WWF, that is engaging in the policy framework that is absolutely fundamental in driving the kind of incentives that lead to these kind of partnerships and wider at scale being successful. Thank you.
Thank you, David. In my excitement to introduce the panel, I forgot to introduce myself. I'm Nathaniel Mason. I'm a research fellow here in the Water Policy Programme. Having got that out of the way, I can now introduce our discussants, equally distinguished. Andrew Norton is ODI's Director of Research, has a background in social anthropology, but now covers a huge range of issues, including poverty, vulnerability, natural resource management, social policy, the list could go on. And helps ODI's programmes at a strategic level to ensure that their reach is and impact is as great as possible. We have Robin Farrington, who is a water stewardship advisor at GIZ, heads the support unit to the Water Futures Partnership, which was the initiative that David mentioned, and is also currently an advisor to the International Water Stewardship Programme, which is being funded by the German and British governments. And was previously at WWF-UK, which is where David Tickner is currently Chief Advisor at WWF-UK and a Visiting Research Fellow at the University of East Anglia, and is a strategic lead for WWF's river conservation work globally. So I'm going to invite each of the panelists, perhaps in turn, to give 3 minutes of rapid feedback, entirely at your discretion, but obviously both those talks threw up a huge number of issues. For example, how to bridge between these multinational perspectives, large business perspectives, and small private sector, including farmers, and perhaps some of the experience from water stewardship programs to date. So 3 minutes, if you don't mind, from each of you, and then we'll move to more interaction with the audience and hopefully the online audience as well. Andrew, would you be able to kick off for us?
Sure. Thanks very much, Nat. I'm going to come at this from a specific angle. First of all, many thanks to the first two speakers, which will throw a different perspective, and it's about technological change and the different kinds of corporate actors. I'm thinking particularly of fracking, otherwise known as hydraulic fracturing, to generate, let's just take shale gas for the moment, which is the more benign product. China's 5-year plan anticipates going to US levels of production by 2020. We'll probably see many other countries moving into this over time. It's obviously a technology that uses massive amounts of water, and the quality of governance matters enormously for what happens to aquifers and what happens to the water that's removed, because obviously chemical additives and other things are used. So in short, there are huge risks. It's an evolving technology. It's not clear yet that science has been adequately taken on board in terms of how it will be rolled out. And it's also, if you like, something that may not, to the degree that agribusiness does, encourage a long-term perspective on the part of the producer in stewardship of the resource. So what does that mean in terms of governance? Well, I guess it means that corporate responsibility is definitely to be encouraged, maybe above all in this kind of field. But it also means that governance will be vital, to find ways to manage risks, to look at the sustainability issues that were mentioned and the equity issues, but also to ensure that the science is actually fit for purpose and fit for regulation as it goes forward. It's just a very brief example, just to cut across some of the discussions we've had up to now and say that this is about more than agribusiness, and there are many different kinds of corporate actors who bear on the sustainability and equity of water use over time. I've also got some observations more from the land debate and how negotiations are handled with communities, but on the 3-minute rule, I'd probably better hold those. Thanks very much, Nat.
Thank you very much, Andy. Hopefully we can come back to those other points in a moment. So turning to Robin, if you'd like to further stimulate us with your thoughts and reactions.
I'll try my best. I feel a little bit out of my league here, actually, looking around and seeing a lot of old faces, and obviously people a lot more knowledgeable and probably wiser than I am. But and on that point, actually, I won't comment too much on Tony's presentation. It's fascinating, and I really love to hear Tony every time I do, but realise how far away in a way I am from that, because I'm at the implementation end. GIZ is working around the world in 130 countries, and we work on, in this case, with the support of the UK government and the German government, on implementing water stewardship partnerships, as you heard before from the SAB Miller example. So the thing on our mind really that I'll pick up from David's talk was really how to get to impacts in these partnerships. How do we actually, what does risk management really look like? Not just for the private sector, but collectively. How does society, going to Tony's presentation, the .org, the .com, the .gov, come together to really, collectively, in this new form of governance, tackle risk? Now, we are probably all aware that integrated water resources management sets out a whole paradigm of how this can be done and how it should be done in a way which many countries have adopted, but we also know that in many cases this is not necessarily having the desired impact. So the question is, what role, for me, what role can water stewardship play, and water stewardship partnerships and collective action in trying to catalyse and give energy to integrated water resource management, especially to benefit the poor? How can we make sure this is an inclusive process, and how can we make sure that partnerships have a high degree of integrity? So when government actors, donor money is used, government actors come together with civil society, with international NGOs, agencies like ours and companies, how can we ensure that there's a high degree of integrity in there, that both in the outcomes and actually in the partnership processes as well. So I know we're going to touch on that later on this afternoon, so I don't want to dwell on it too much. How am I doing? I've got still a little bit. Okay, and for me, the other real question is, well, why is a partnership actually needed in many of these countries? And that's, a partnership's needed because there's a gap. We don't necessarily have partnerships all over London to try and get people clean water or to manage water in the Thames Valley, for example. So yes, there are partnerships going on, but the reason a partnership's needed is because there's a gap in the ability for the public authorities to do their job. And this capacity gap and link to governance is what I believe water stewardship should be trying to address the most. I believe that the private sector should be trying to catalyse and support and hold to account the public sector to do its job well in regulating and managing and planning water use. And if we fail on that, if we do lots of nice projects and lots of nice brochures and stories and so on, but actually fail to tackle that problem, then water stewardship is probably not going to contribute that much. So I believe that that's the approach we have to take and have to think about, and with a very strong role for civil society, and we can perhaps come to that in the discussion.
Excellent, thank you, Robin. So, Dave, as a representative of civil society, big hat to wear on such a panel, what's your impression from that?
2 points from me, both in the interest of trying to keep the conversation lively. So I'm going to make one quite grand claim, and then I'm going to do something I've never done in public before, and that's disagree with Tony Allan. So the grand claim is really around the magnitude of the paradigm shift that I think we're going through at the moment. And we've seen hints of it today. So this whole event is framed around a new development era. And I think there's several reasons why that's right. And they're not all relating to the post-2015 framework. In fact, if anything, I think that's the least important part of it. Climate change is part of it. That brings a huge amount of uncertainty going forward for anything to do with natural resources or development, I think. The rise of the emerging economies. I do a lot of work in China and Brazil and India. Those aren't developing countries anymore, at least not in the way that I learned about when I was an undergraduate a few years ago. The narrative on Africa is changing. There's a narrative now about Africa's rising self-confidence. Several of the fastest growing economies in the world are in Africa. Africa isn't the basket case that it was just a few years ago. That's different. And even when we look at the post-2015 agenda, the idea of sustainable development goals, unlike the MDGs, there's a chance they might apply to every country on the planet, not just those poor benighted countries in the south and east. So it's going to look different going forward. I think beyond the development debate, there's a new business era coming as well. I was reading the outputs yesterday from a survey that GlobeScan did on business sustainability strategies around the world. And GlobeScan are saying that we're actually moving to a sort of a third phase in business sustainability now. They don't quite know what it's going to look like, but they think it's going to be something to do with the kind of things that David talked about, moving beyond the fence line, engaging public policy, engaging many more stakeholders over a broader range of issues to try and ensure that the overall climate for business is favourable. So there's a new business era. And then just picking up something Tony said, which very much chimed with some work that WWF has done with the Ministry of Water in China. There's a new water management era that we're entering, at least in some parts of the world anyway, moving beyond the engineering-led approach into something that actually combines the social sciences and the environmental sciences as well. So we've got these three things: a new development era, a new business era, a new water management era. Nobody knows what it's going to look like going forward. I mean, really, nobody knows what it's going to look like. I think the kinds of water stewardship initiatives, which many of us in this room have been engaged with, they're an attempt to engage in some ways or another with that new era, that new paradigm. But I think we're kidding ourselves if we really know whether or not they're going to be successful, and we're kidding ourselves if we know how they're going to turn out. Just to be clear, that's not a reason not to do it. It's a reason to acknowledge the risks of engaging in these kinds of initiatives. But I think, in fact, in many ways, we have to engage with new ways of trying to manage natural resources, with new ways of trying to engage the business sector, with new ways of trying to help move this development debate on. It's really a question, I think, of engage in these kinds of initiatives or die for many kinds of stakeholders, but you have to acknowledge that there are risks and some will fail and we will make mistakes. The kinds of things that Robin and David talked about in terms of practical initiatives, they're still pretty new. Disagreeing with Tony Allan. I don't think farmers will save the world. I think farmers may feed the world, but I don't think farmers will save the world. In fact, I think there's all sorts of evidence to the contrary, especially where natural resources, especially where water is concerned. And it doesn't matter where in the world you look. If you look at the Ogallala Aquifer, if you look at large parts of India, if you look here in the UK, I mean, you only had to follow the debate around the winter floods here and the debate around dredging to understand that farmers, they're pretty good at farming. They're pretty good at understanding risk at the farm scale, but they're pretty bad at understanding risk and taking action to manage risk at anything at the sort of society scale. I think in particular when you look at water resources. That's not to say farmers can't do their bit to help save the world, but I think we're kidding ourselves if we think that farmers by themselves, even with the help of the odd accountant, are going to save the world. Strong regulation is as important for farmers as it is for businesses in this agenda.
Thanks very much, Dave. Okay, in the interest of opening up the conversation, I'm sure the speakers will probably like to respond to the points made by the discussants, and hopefully we can do that as we go on. But we've got around 20 minutes left for questioning. You're probably aware by now that SABMELA, GIZ and WWF have worked together on these issues, and hence are speaking from experience on a lot of this, but are also a collaboration, and all collaborations need to be challenged from the outside, which I hope is what our questions will do. A brief reminder that our event today is around water equity, around questions of who gets what, and ensuring benefits are evenly distributed or fairly distributed, which includes both poor and marginalised people and ecosystems. So, if I could open the floor up, we could take maybe 3 questions at a time, and there should be some roving microphones that can be distributed so that our online audience can hear. We may be getting some online questions as well. Please do state your name and your organisation before you pose your question. So, we have at least 1 question here and here. So, 2 at least, 3 at least to start us off in the middle, and maybe we can look to the wings in the next few. So, either gentleman at the back, please, to start us off.
Hi, Allan. Is it working?
Yep.
Yep.
Yeah. Okay, I am really from outside this arena, nothing to do with water at all. Just came because I was curious. So I hear water management and I think MBA. I think MBA and I think PESTEL, politics, economics, sociology, technology, the environment and law. I hear equity and I think of law. And what I want to know is, in terms of law, what sort of basis we will use to develop water management to ensure equity? And that is something I am only vaguely hearing.
Thank you. There was another question from a lady just in front.
Okay, my name is Nigat Hasnan from Sustainable Resource Management Solutions, and I found the talk really interesting, but I have a couple of questions, in particular directed at David Norman, and regarding some of your social corporate responsibility activities. And when you started working with the communities, etc., did you find any problems, or did you influence local businesses, and how did they interact with you? So locally originated business, because you're like a multinational. Okay, that's one question. The second question is some of your projects related to water conservation in Rajasthan. Who funds them, and does the community get involved in the economics of it as well? So very specific questions.
Thank you very much. And finally, we had a gentleman in the front row here.
Andrew Ross from Global Garden, looking at the finance behind this, and in particular the role of the Natural Capital Committee in the UK, putting a valuation on ecosystem assets, for instance water, and the role of watershed evaluation. The floods and the droughts globally are due to a lack of proper economic valuation of water at source. And so natural capital accounting, how does that figure in any of this analysis?
Excellent. 3 or 4 very challenging questions. Perhaps we could start with David, as there was a question addressed specifically to you. Would you mind answering that? Those
Sure.
two?
Yeah, let me try and wrap a little bit on the equity side as well into that. So really good questions, and I told that Nimran example too quickly because our excellent chair had already given me my 1-minute warning. I mean, the heart of this, and it goes to the question of that contested space between Dave and Tony on the role of farmers there. This was all about farmers, and where we are is, certainly you can't solve these problems without farmers being central to them, and farmers are too peripheral, certainly in terms of the policy debate end of this, and in terms of being actively involved in the design of solutions. And that was the whole point of that program there. Who's funding it? We are. And why? This is not any social responsibility program, just to be really clear. This is absolutely essential for our business there. These are groundwater resources that are going to go down year after year after year, and our business will be put at risk at that. And at the same time, we are closely connected with those local communities. There is absolutely a business case for us also to be concerned and engaged in those livelihood and equity questions of very poor farmers who are also, in some cases, our suppliers. So that's the reason for getting involved in that and for putting up the initial capital investment, for seeking to work together with farmers in a setting where, as Dave has implied, it doesn't work without those kind of incentives. So that's the whole point about that area, is the government regulatory setting is inadequate in giving those farmers the incentives to manage water carefully. And that's the reason why the water table is going down so rapidly. It's not that farmers don't understand that, perfectly aware of it, but they, like any other actor, face long-term, short-term trade-offs. And then when water is effectively free, when farming is such a strong political lobby group that politicians are not open to setting a clear, firm framework in which water is valued more robustly, then in the absence of any other intervention, those groundwater resources on which we all depend, including those farmers for their livelihoods, are going to dry up. So that was the point for us in taking a lead in convening and getting involved and then designing a program with farmers, because it's only going to work with those farmers at the heart of it, because they are the lead actors in that situation. That's why it's working. And it's not a matter of imposing a solution. There's a capital investment for the kind of structures that are needed to collect rainwater and replenish deep groundwater resources. And there's a technical side in terms of enabling farmers to get involved in better irrigation techniques. Ultimately, it's in everyone's interests, but it doesn't happen automatically without the incentive structure in place.
Thanks. I'm just going to interrupt the flow of the questions we've just been asked to pose one that's come in online from Roel Blesgraaf from Zimbabwe in the Netherlands. I'd like to pose this to you, Robin, but allow you a few minutes to have a think about this so we can turn back to some of the other questions already asked. And this question is, how do you transfer challenges and best practices from the water stewardship programme from the community level to the national and global level and vice versa? So thinking about scales and the interactions between scales, scaling up and potentially scaling down as well. So we can come back to that, but to cover the other questions that were posed by our audience members, the question on the place for law, environmental law and law more broadly to ensure equity. I don't think we have any lawyers on the panel, so this may be unfair, but I was wondering, Tony, as probably the polymath, not that we're not, the other members are not all polymaths, but perhaps you can tell us where you think law fits into this.
Well, excuse me, we're in a position where we don't want law. Getting law in is a political process, and so we haven't got the politics organised to pick up the law and implement it and do wise things. Often there are laws in place, such as in the United States, that are absolutely going in the wrong direction in terms of doing the right thing. At the same time, there's a whole body of law being put in place, and the Environment Agency, which that is beginning to get things pointed in a different direction. So it's law certainly has a role, and it will be an incremental role. It'll be a struggle. It'll be a massive political struggle to get the law in, as we have found in Europe. We have got a common agricultural policy. We've got now Pillar 2, which is wanting to get the incentives to farmers to think about stewardship as well as about productivity. It's wise things from Brussels, but it's implemented at national level, and so it's all incremental. It's a good idea. We need to have a good direction pointed out, mainly by the NGO sector, and we need lawyers to come in to try to help it happen. But if we don't get the community that's mainly managing water to see the point of it all, then it will take even longer.
Thank you, Tony. Andy is looking to respond.
Yeah. Just a quick point that the other intersection, obviously, is with the structure of rights, of water rights, and how that works out individually and collectively. Where rights are not held clearly as private property, you often have some kind of quasi-legal consultation process. How's that framed? Who gets a voice? Is it about consent? Is it about consultation, etc.? And then just the final point, obviously, is the risks of behaving as if the legal system works and is accessible to people. You know, in some places it may be, in other places it may not.
Let me comment briefly on the law question and then natural capital accounting. I mean, I see both of these as sort of part of a broader question about policy. Law is one manifestation of policy, so can be sort of accounting and pricing and various other things as well. Perhaps as part of that postmodern approach to water management that Tony was talking about, actually we've seen a whole bunch of good water laws introduced in the world over the last 20 years, starting in Mexico in the mid-1990s. South Africa had a landmark Water Act in 1998, here in the EU Water Framework Directive. Brazil, Tanzania, Kenya, various other places, quite sensible laws, all of which say pretty good things about trying to ensure basic human needs as a first priority, trying to ensure that there's some kind of reserve of water for the environment as a second priority so the whole system doesn't break down, and then trying to take a more rational approach to allocating water for economic uses. That's all well and good. But in almost every instance, the challenge hasn't been defining the law, it's been implementing it. So I think law is critical. I think quite a lot of work has been done on that. But the challenge of implementation is something we're still grappling with. And that comes back to a lot of issues around politics. It comes back to a lot of issues around institutions and the strength and capacity and remit of institutions. Sometimes it comes back to issues around data as well. On natural capital accounting, I mean, I think it does have a role. Pretty much everybody that I speak to agrees that one of the reasons why water is poorly managed in most parts of the world is because there isn't a robust way of really describing the various things that water, freshwater ecosystems can provide to society in terms of social and economic benefits. That's not confined to water. I mean, that's the same for all sorts of areas of policy as well. I think the slight risk with natural capital accounting is that it might take us down a pricing route. And I don't necessarily have a problem with water pricing, but except in terms of the implementation challenge again. So if you're going to set a price for water, you need to know how much water there is, assuming you're setting the price to manage scarcity. You need people who can set that price, who can gather the tariff, who can reinvest that tariff sensibly, who can adapt the tariff, ensure that it's socially equitable, and so on and so forth. In other words, you need strong institutions. And in most parts of the world where scarcity is a real challenge, you don't have strong institutions. So it's a practical challenge of implementation rather than a fundamental challenge of whether or not we should account for and price water accordingly. The final thing I just say on natural capital accounting, a little bugbear of mine with all these water debates, we tend to think about water as the only thing that comes from sort of aquifers or river systems, but of course they produce other things. They produce sediment that keeps farmers above the rising tides in deltas where they grow lots of rice, for example. They produce fish, which are the main protein source for however many hundreds of millions of people around the world. So if you're thinking about natural capital accounting, you've got to move beyond just pricing the water. You've got to start thinking about all the other components of natural capital and how those interact as well.
Thanks, Dave. I know Tony wants to respond briefly on this point, and then perhaps we can have a quick answer from Robin on the online question posed earlier, and then get a couple more questions in before we move to the next session.
Yeah, thank you. Thank you, Andrew, for raising a point. Natural capital accounts and processes tend to be devised by economists, and economists know what should be done. The accounting side that I'm interested in is farmers manage 90% of this water. They're interfacing with the environment. We want them to be good stewards as well as good producers. They're working in a market system, proud market system that does things according to market principles, and they're controlled or guided or shaped by accountancy rules, accounting rules and reporting rules. In food supply chains, water doesn't figure at all, and I'm never going to recommend pricing because I know that it would fail. But we do need to start somewhere, and that's with reporting rules. So we need it in the balance sheet of a company that comes every year to meet the shareholders, but much more important, the investors. There should be rules upon which they should be reporting whether they have conformed, and it will be quite complex and relate to what farmers do, but they need to be helped. There are some of them want to do it, but they won't do it if the others don't. They need accounting rules, in my view, or reporting rules. And therefore, and it isn't that the market system is a wonderful, rough and ready system that produces wonderful goods and services. It's regulated by accountants. And that's a rough and ready system. Have you ever filled in your tax return and how rough and ready one's personal accounting is? And you have specialists and people, and many of the bigger companies, like certainly Unilever, is run by an accountant. So to get accounting ideas into the private sector shouldn't be difficult, but they don't want them there. So it's up to society to get them there and to make sure that society's relationship with farmers, who have the relationship with the environment, is in this private sector market system, is under some sense of direction.
If I may just say, the EU Sustainability Reporting Directive was passed last month, requiring all EU companies with more than £2 billion turnover to report on their entire sustainability throughout their entire supply chain. That hasn't yet been understood across the corporate market, but it's certainly understood by
because investors look at that.
Yep.
Excellent. I'm hoping that some of these more nitty-gritty issues we'll get to explore in the afternoon session as well, which will touch on the integrity and potentially the accounting aspects as well. Robin, could I ask you to come back on that online question?
Excellent question online, so well done from the Netherlands. I mean, really, how do we get beyond these islands of happiness or these good case examples? They're not always happiness, but how do we get beyond these to something more at scale? And I think I would take it at different levels. First of all, we have goals set very clearly in our program by DFID and the BMZ in Germany around integrating the lessons from these partnerships into public policy. So in 5 countries, we have to do that and actually take these lessons and try to influence. So it doesn't mean to rewrite the laws or the national policy, but it can be different elements of guidance notes and so on. But that's something where GIZ sits with the Ministry of Water and the water institutions all the way down the line to actually build their capacity and help them on reform. So we're very well placed to do that. But we also have targets very concretely around training and capacity development of government officials, private sector, etc. So we actually don't just see a capacity gap on the public side, but also very much on the private side. Companies, the guys on the ground, are very good at making beer or whatever technology, but they're not so good at partnerships and not so good at understanding water politics and engaging with the different sectors and coming to equitable outcomes. So on the private sector side, that's where I believe the private sector can play the biggest role itself. There's nothing like peer-to-peer learning. In South Africa, we're supporting the Strategic Water Partners Network that SAB Miller helped set up. And that's, again, where a number of businesses are coming together to look at certain issues around water that are common across South Africa and are working together to try and tackle that. So it's, again, a kind of forum or a platform for sharing information. At the regional level, we're working, of course, in Africa with SADC, AMCAL, the African Ministers' Council on Water, Nile Basin Initiative, etc. And these are great mechanisms to spread good practice and at the regional level. And finally, at the international level, what we've used for the last 4 years and what's been very effective is the Water Futures Partnership as a sort of brand and an umbrella under which public, private, and civil society can come together and say, look, we all have very different interests and all work in very different ways, but we have also one common interest and one common belief, and these are the lessons we're learning from working together. So we're often from the Water Futures Partnership, but also working with the CEO Water Mandate and others to try and do that. So it's actually absolutely integral part of our work, because one of the main reasons we're doing this work is to generate lessons and try new things. It's not, we don't believe through these programs we're going to save the world. It's more trying new ways of partnering, like Dave was saying earlier.
Great, thank you, Robin. Are there any other questions in the room? Excellent. One from my colleague Peter Newborn, possibly on the law issue, but maybe on something entirely different.
Yeah, well, law gets everywhere.
As does Peter Newborn.
It is on the law issue, but it's a question we'll get to Robin's very good comments, and I'm going to ask a we question. Who is we? But first, to get to that, I mean, on the law issue, I think we're in danger of just talking about water law as a silo. Basically, in terms of stewardship, the law that counts is company law, if we're talking about. And company law, of course, is another form. Companies are a form of stewardship, so the directors have responsibilities of stewardship in terms of company assets for the members of the company, essentially the shareholders, not exclusively. So the question is, who is we when a multinational is working with a Colombian partners to try and solve a problem in relation to water in Bogota? And it sounds a good story, but as stewards, your responsibility, your first responsibility, and you see this every time you read an annual report of a company, is to your shareholders and obviously the return on yields. So the question is, how much correspondence is there between your shareholders, perhaps dotted around the globe, and the people of Bogota? Now, the we question is, if you can show that you are a stimulus and an aid and a support in many ways to companies which are more rooted locally, with a shareholding that's closer to Bogota and Colombia, then I'm a little bit more convinced that you're not people valiantly walking up an escalator that's going in the opposite direction, putting money, profit to companies. And as the Financial Times Lex column recently said, that's what companies are best at. Shareholders own companies, and their job is to send money and profit to their shareholders. So who is we, Robin?
I think it's a very good question. So when I'm talking about we, I'm normally referring to GIZ, but also to we as a partnership, because we do work in every country very closely with our partners on the ground. So, but I take your point, and I think this comes to the heart of the governance issues. And we have seen more and more, the more work we do in the more countries, that companies do have deals with governments about water, and companies have deals where they might open a new factory in a water scarce area. It's questionable why they were allowed, and then there's a deal done perhaps with the water utility that even when water runs out, the company will still get supplied with water. So in that case, that becomes, and I think we'll get onto this in the afternoon on the integrity session, but this is where it becomes very tricky for an agency like GIZ, who's using taxpayer money to go and implement aid. We become in a very tricky situation. So that's when the we question becomes even more difficult. So I agree with you. It's the company's responsibility to take resources and divert those back to shareholders in the form of capital. But in reality, if those resources require water, which they do inevitably, there is a balance the balance of power comes into play locally. So it is really an issue, and I hope we get into that today.
Great, okay. We're at the end of our session now. I'm going to, if I may, give the last word to David, who's possibly part of this we also, and then we'll have a fluid transition to the next session. So David.
Thank you. Just to pick up the same point there, and going back to Andy's point, there are certainly huge areas where there is not the interest alignment that I have proposed. But what I'm suggesting, and of course government has a critical role. Governance, it's how you manage those difficult trade-offs and different interests within that. So that's absolutely, governance questions we're coming on to, absolutely central. What I hope the case I've made, though, is we do need to do more on hunting down these win-wins. These win-win opportunities are far more, I think, than we have given ourselves the opportunity to search for. And I've spent much of my career to date as an NGO campaigner. And the currency you trade as an NGO campaigner is very much on the reputation agenda, and that's your form of leverage. But if we get stuck solely in a kind of compliance mindset, compliance with human rights standards, pollution standards, all those are critically important. But it's a very different mindset. It's a rightly challenging and suspicious mindset. It's so different from the setting where companies such as mine have discovered there is a massive alignment between shareholders' interests as in the profit motive that we're far from ashamed of, it's what we do best, and these local potential win-wins. And the moment you tap into that, that's the point at which this explodes into scalable operations, because there's a strong case for the company itself to be investing in this and to design the programs with local communities and local actors in order to make them work in all of our interests. Those are the win-wins that I think we should be pursuing really vigorously.
Great. Okay. I'll wrap up then by saying thank you very much to all of our panellists, our speakers, and a reminder that there is another session this afternoon covering not dissimilar ground, but hopefully from a different angle. So if you have burning questions, there'll be a chance to ask them then. Please, members of the audience at least, don't go anywhere. I'll ask our panellists and speakers to make way for the next session, and we'll have a quick rearrangement. But thank you very much to all. Thank you.